Is your investment in a downward spiral thanks to the epidemic? And what should you look out for in a bear market? Hi, I'm Luke from Money Maverick. So a bear market is defined as the extended period where your stocks see a drop in value over time. For example, your great financial crisis in 2008. And even if you look at it geographically from, let's say, Singapore or the Asian area, these were bear markets or prolonged periods where you would see stocks tumbling for 6 months, a year at a time, and losses could go up easily 30, 40, 50%. For the most part, during a bull market, which means that when things are doing well, people usually do not do anything. We just kind of kick back and we look at how our returns will increase. But during a bear market is really when you have to decide, okay, like what am I going to do now? So you have 3 options. Usually it's referred to as the trifecta, which is your buying, selling, or your holding. Your first obvious position is to hold, because this is assuming that you've bought the stocks that you want to already. And if you do not think that this is going to last for too much longer, then you can just hold your position because you believe in the value of whatever you bought at the time, and it does not matter that you're currently going through a particular bear market, because for every bear market there's always a couple of additional bull markets. Now your second thing that you can do is you can sell your position. Selling your position is obviously hard because during a bear market it's suggested that you'll probably have taken losses. But if you cut those losses, you'll be able to seek out investment opportunities elsewhere. Your last option is to buy, and this may seem a little contrary to the idea that you are having something that's falling and you're going to buy into that. That doesn't seem like a very good idea, but for the most part, an aggressive investor would see it as an opportunity to buy low. If you have a longer duration, if you're aggressive and you believe that these investments will eventually go up because it's a solid investment, then what happens is that during a bear market, you're actually buying value at a discount. Buy low, and eventually you'll be able to sell high. There are very specific investments that tend to react well during bear markets. One is, of course, your bonds. Most people will tend to put their money into so-called safer instruments which have a degree of backing, and that is where quite a lot of older folks also put more of their money towards. Your second position is in your commodities, such as your gold, your oil. Some of these particular positions, even something like crypto, tends to be a favorite option during a bear market where we don't know where value will go up, so we're just going to put money in these areas where people actually utilize stuff. And your last position, of course, is cash. So if you have a bunch of cash and you decide, okay, I'm going to cash out my stocks now at a reduced price, you can always hold on to that cash longer. And if stocks happen to plummet further, then you can do what I said, which is to take your cash and go buy more stocks. So these 3 particular things will not solve your problem, and it's hard to say whether your investment will be safe. But at the very least, you will now have created a wider range of options, and you can still create value for yourself during the bear market itself, not just after. In a nutshell, don't skip out on opportunities because of fear. If you'd like to explore your options with a licensed financial consultant and investment specialist, you can always contact me at the links on my number below.